Question is, and some of your investors and unit holders will also be wondering, have you had to deal with redemption pressure? What is the kind of selling that you're seeing? And I'm guessing based on the kind of data that you've shared, it's quite comfortable.
Yeah, we had some redemption in the initial. In fact, to be very candid with you, we started accepting public money in September 2020 onwards. And since then, I don't think we have any single day redemptions. Okay. So I think investor has really liked us the way we have managed their money and the return, the superior risk adjusted for returns which we have given. So they have been with us for, that's the reason this family has grown to now 80 lakhs investors or 80 lakhs folios we have. So we have not seen any sort of pressure in the right from before many years. But yes, after there any noise come or any clarification come, is bound to happen some small. For a few days, there was redemption. But if you really look at last 3 weeks, now this episode is over, and we have seen hardly 600 odd crores outflow, which we have seen. And last 2 weeks has net inflows. Okay, even yesterday also we have net inflows. So I don't see it was a few days phenomena. Which happened, and now life is back to normal in terms of the way activities used to be. Businesses anyway was always normal. It was never impacted even for a day.
Sandeep, would I be right in understanding that you've more or less used cash to deal with these redemptions, since it was a relatively small amount?
You have to understand, we anyway, when this episode happened, we have nearly 10,000 crores of cash in our overall portfolio. It's not so we didn't have to raise anything, and the redemption was not that meaningful. Okay, which market anticipated. In that proportionate, it's hardly anything. So in 3 weeks, if you have lost 600 crores, which is less than 1% of your AUM or 0.9% of your AUM, it's not very meaningful numbers. See, you have to understand that the way we manage our money is very different from the industry. Most of the schemes have hardly any exit loads. Okay, for 15 days exit loads, most of the schemes have, which means the way we manage money, our portfolio has to be liquid. Anybody can participate and any can exit at any point of time. We don't take very large load factor or the exit loads, which we will talk about, and lock-in period for longer period of times, which is not the case. So anyway, our portfolios are fairly liquid. That's the way we manage money. Since we are largely analytic firm, apart from valuation analytics, we do give a lot of weightage on the liquidity analytics. If we understand the liquidity of the markets and the global economy, then we do analyze our own liquidity also. So portfolios as a strategy are always going to be very liquid.
Am I correct? I was looking at some data. It was saying that about 2% of assets under management for the fund house as a whole in cash. Is that wrong, or is that more or less accurate?
2% of the fund house is in the cash.
Yeah.
It could be even higher. We generally keep 4-5% cash for any opportunity, not for any specific thing. So, like I always say that we always have a very large amount of cash because we are opportunists. We don't mimic indices. So we are active money manager. We take the fees of active money manager, and we don't offer quasi-passive products. Okay. And that's one of the reasons why active managers globally have, the relevance is getting lost as compared to passive manager, because everybody is taking fees of active manager and offering passive product. We are true active money managers. And we do keep good amount of cash at any given time because we are very opportunist. We are unconstrained fund house, style agnostic, market cap agnostic, sector agnostic. Whenever we see any great opportunity and we see superior risk adjusted opportunity is there, we tend to participate. Is only can participate if you have a cash at given point in time. So 5-7% cash is a very normal thing which we keep in our portfolios.
Okay, understood.